All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live. Thank you, everybody, for being here. It's Thursday, February 19th. We got a bunch of earnings that we are going to talk about today. Opendoor and Texas Roadhouse are the big ones. Both of them technically in the consumer category because Opendoor is for real estate for consumers and Texas Roadhouse is for food. A couple other companies that we will get into. We got a bunch of headlines that we have had over the past few hours that we're going to discuss. In terms of how these markets are ending up today, we'll also have macro Thursday, and Chris will be on in a bit. But we didn't really get a green day. Now, we attempted Nvidia making the push right there, right at the close at 187.49. Nvidia got all the way down to 185. So Nvidia recovering right there. S&P 500, 683. I will take this over what we've had over the past two Thursdays, which were relatively ugly. We went down 2% on each of the last two Thursdays, and then Friday we had to kind of recover for it. Last Friday we didn't recover. The Friday before we did. 683, getting a little pump on the S&P into the close. I mean, it's better than nothing. You got Tesla going green, AMD going green, Amazon basically being flat on the day. Amazon was at 206 at one point. Meta got to 646. Now it's 643. Amcor is up 3%. Rocket Lab, great day. That's up 3%. Nebius, phenomenal day, almost at 107 onto the close. It did get above 107. Ondas up 3%. Red Cat's up. OSS has had an incredible day. They got a really good contract this morning. That's up 24% on the day. But in general, it's a flat day for the stock market. I mean, you're really not seeing a ton of momentum across a variety of different growth stocks. Now, there are different sectors that caught a bid that we will talk about. Broadcom was green in the morning. Now it's red. Etsy still up 8% on the day. Figma, I think, held on to a little bit of its gains. Yeah, 9%, which was good. It was down almost 1% in the morning after being up 18%, now 9%. But the S&P in general, 683.69. Now, the major issue we had this morning was around geopolitics. You got D-Wave right there. That's up 1.5%. Google right there also trying to go green. And that issue around geopolitics has to do with Iran and potentially striking them. Trump did make some announcements today in his Board of Peace press conference where he said over the next 10 days, we will find out how long peace in the Middle East tends to last. And that was a bit of a nod to a lot of the reporting that came out over the past 48 hours around this idea that, well, it looks like the United States is getting very serious with the military presence that is being increased into the Middle East region around striking. Will we strike? We have no idea. Either Trump is posturing or he's serious about this. But basically, Trump has confirmed the reports that they're thinking of doing it. We just don't know if they're actually going to do it. And as a result, markets are kind of reacting to that in the context of at least energy. Oil prices up about 2% of the day, passing $70 a barrel. But you're not seeing growth stocks necessarily react to that. In general, I mean, in the market, we were red in the morning, and we're now kind of green towards the end of the day to flat. It's one of those Thursdays where not that much happened across the entire market, although certain sectors and certain stocks definitely caught a bid. One thing that I thought was really interesting, MicroStrategy right there up 3%. Bitcoin, are we above 67? Yeah, just crossing above 67, which is nice to see. Look at Nvidia go. This thing was stuck at 185 the entire day, now 187.50. So these last 20 minutes, Nvidia is getting the bounce as we get into the close. We have Nvidia earnings next week. We'll talk about capex and Nvidia as well with Chris, because I'm sure he has a lot of thoughts on capex, and that'll set up what we see with earnings next week. I was going through John Deere's numbers, which did have earnings today. This stock is up 42% year to date. I want you to listen to what one of the fund managers that owns this stock had to say about John Deere. I thought it was quite incredible when you hear what they have to say.
Providing a nice boost to its outlook. Rebound in demand for small turf tractors that really led the big outperformance that Deere is seeing. It's also helping bring inventory levels down. Plus, the farm economy is looking a lot better. Soybeans and beef have been depressed in recent years due to China buying less from the U.S. and more from Brazil. Executives on the call saying we're starting to see some stability for producers as China has resumed purchasing U.S. soybeans and the recently approved government support programs providing some liquidity. Ag prices play a huge role, right, in lifting farmers' willingness to pay up for tractors and combines and equipment that uses AI. Deere is also being helped, Carl, by the broader rotation into industrials. GAMCO fund manager telling us that companies like Deere make things, tangible items that cannot be disintermediated by AI. And that's resonating at a time when the market is punishing companies like software that face that threat.
I thought this quote was incredible. So one of the fund managers talking about Deere says, the reason it's important for people to own this stock is because these companies make quote unquote things, tangible items that cannot be disintermediated by AI. I mean, I thought that was just incredible because when you actually look at the numbers on John Deere, and again, they're a good company, they deserve a premium. There's probably an AI narrative associated with them and Caterpillar from an industrial perspective. But net income is down 25% year over year. Operating profits are down 60% year over year. Sales are up 13% year over year. Stock trades at 35 times earnings and is up 42% year to date. But the reason it's important to own the stock is because they make things. That is where we are in this stage of the cycle when it comes to the stock market. You've got fund managers saying, well, AI can't commoditize a company that makes things. So because they make things, you got to own the stock. And I just wonder over the coming months, what's going to happen when people wake up and say, we can't just pay this much for a company that makes things in relationship to all the other tech companies that are growing exponentially faster, like literally exponentially faster in comparison to the John Deeres of the world, even if they don't make physical things, right? They're not going to be disintermediated by AI in and of itself. And let's just say the worst case does happen and all these companies are disintermediated by AI. That means Nvidia should be a lot higher. So I think the catch-22 here, or sort of the double bind here, is either Nvidia has to go higher if AI is that big of a concern that John Deere deserves to be trading at 35 times earnings and Amazon deserves to be getting hit at its lowest multiple in the past decade, or there's going to be a rotation back to growth. And that rotation back to growth is going to be violent. I don't know when it's going to happen, how it's going to happen. I don't even know if it's going to happen, but it does feel like eventually that does happen. And if that is the case, then a lot of these stocks should be relatively cheap. 398 right there on Microsoft. That one's still below 400, cannot break above 400 on the day. It tried a couple times, but couldn't do it. Carvana still down 8%, Upstart down 3%. Then Salesforce, a software company that doesn't make things, down 1.2% and down 35% year to date. That's what we got, folks. Yes, so Nvidia doesn't make things. I guess not. I guess Nvidia doesn't make the same type of things that John Deere does. I mean, I don't think the street's ready to really see the numbers that Nvidia puts up. They are going to demolish expectations and guide even higher. Every sign you could possibly ask for Nvidia showing massive, massive growth on the guide for 2026 is there with the capex cycle. It's just hard to imagine that stock continues to trade at this low multiple. By the way, if there's any industrial AI demand, that is being led from Nvidia. So if John Deere and Caterpillar are catching a bid because of all this demand, that demand is because of all the capex. At the end of the day, the capex is the story. And it's not like we can just avoid that story because the market is afraid of capex. But next Wednesday, we'll have a better story and we'll see what happens. John Deere, that's up 10% on the day. Caterpillar, also a relatively good day. That one is up about 1%. Google, still flat. We got 6 minutes until the close. Let me know if anyone bought or sold anything today, if any trades kind of took place. Nebius right there. I think it's going to get that 107 close, which is really good. Last time it was 107 was January 15th. It's been a while for that stock to get above those levels, but hopefully we can get that close. Shopify at 124, another green day in the row for Shopify. I think the Qs are going to go red today, which would be the first negative day all week, which it is what it is. If the red day is down 0.5%, that is not too bad compared to the past couple of weeks. Gold and silver have been relatively tame this morning as well. Silver up about 1%, gold just above 5,000. Wasn't really too much crazy action. I feel like after the last 2 weeks, the market was just kind of like, we're tired of going whipsaw up, whipsaw down every Thursday. And today was going to be a little bit of a breather. And maybe that's what we're getting here. My top holding, Lemonade, took a huge hit. I don't think Lemonade deserved to get hit as bad as it got hit, down about 7% right here. But again, that's every growth stock in the face of earnings. Like, that's my fear for Nvidia next week. So Nvidia's just really going to have to deliver. But every growth stock, no matter how well you do in the earnings, unfortunately, it's just getting hit. ASTS, what about this one? I see a couple people said they bought ASTS. That's up 2.4%. The space names did well. Redwire, that one is up 1.9. How about Lunar? That stock, 1826. Look at that, up 2.9. So a lot of the space names kind of did okay. Micron, that is flat on the day. SanDisk was flat. Oh, yes, Herbalife. We talked about it yesterday on the close. Ronaldo invested in Herbalife, and that stock's up 18%. This is the multi-level marketing scheme that Bill Ackman accused the company of being 10 years ago. He ended up losing in that public battle. I mean, Herbalife up 53% year to date. I did not expect Ronaldo to make an investment in them, but I guess this is where we are in the stage of the market. This is where we are in the stage of the market. Cristiano Ronaldo, the soccer guy. He's the one that I'm talking about. By the way, for those that can't hear, try to refresh. I don't know if it's helpful for me to say to refresh if you can't hear in the first place, but if you can't hear, refresh the screen, and that should hopefully help play out. It's kind of crazy, bro. I don't know why the hell Ronaldo is getting involved with Herbalife. Out of all the company, or Herbalife, you guys told me the H was silent yesterday. Out of all the companies to attach your brand to, that one's a little weird, but yeah, that stock up 18% today. Because why not? 683 on the S&P, up 0.36. Palantir, relatively flat day, 134.65. Not too much momentum right there. Nvidia, 187.50. So we got Texas Roadhouse after the bell, which this is one of my favorite restaurants. Every time I go there, it's absolutely packed. I have no idea how the stock's going to perform, but man, this has been an absolute. First of all, I love eating at the restaurant, but second of all, it's just every time I go, like, it's really hard to get a seat. It's up 6% year to date. And then Opendoor. What Opendoor people do we have in the chat? Opendoor year to date is down 22%. I think a lot of the hype kind of died out on this name. Let's do a poll in the chat on what people think will happen. I like the Opendoor CEO. I don't really love the business model. Having said that, the stock is down so much this year that maybe any good news allows them to pump. Which one outperforms, Open or Texas Roadhouse? Which one do you guys think? Yeah, Trump did accuse Obama of revealing classified alien information. Trump has had some weird takes the entire day, especially with what he's been saying. But remember when Obama went on that podcast and said aliens are real? Well, this was Trump's response to that today.
Yeah. Something that got a lot. You need both. You need all persuasions. No discrimination.
Something that got a lot of attention this week. Barack Obama said that aliens are real. Have you seen any evidence of non-human visitors to Earth?
Well, he gave classified information. He's not supposed to be doing that. You know?
So aliens are real.
Well, I don't know if they're real or not. I can tell you, he gave classified information. He's not supposed to be doing that.
Well,
he made a big mistake. He took it out of classified information. No, I don't have an opinion on it. I never talk about it. A lot of people do. A lot of people believe it.
So that's what Trump said about that. And, you know, it was a bunch of different things he was saying. He then also got asked about Prince Andrew and the Epstein stuff. And here's what he said about that today.
Of Jeffrey Epstein will wind up in handcuffs too.
Well, you know, I'm the expert in a way because I've been totally exonerated. That's very nice. I can actually speak about it very nicely. I think it's a shame. I think it's very sad. I think it's so bad for the royal family. It's a very, very sad. To me, it's a very sad thing. When I see that, it's a very sad thing to see it and to see what's going on with his brother, who's obviously coming to our country very soon, and he's a fantastic man, the king. So I think it's a very sad thing.
So that's what you have from Trump. Again, the Board of Peace stuff was this morning, and I mean, I guess we'll get more information on what happens with the Board of Peace over time. That was about a 3-hour press conference, but then Trump went on Air Force One, and then he was answering those questions as well, and that's what we got from Trump today. All right, here we go. Opendoor and Texas Roadhouse. Those are the earnings we have lined up, and then we will get into some macro discussion. Thank you, everybody, for being here. Thursday, February 19th, the stock market is now closed. All right, we are done for the day. We also have Paladin earnings as well. They got a big contract the other day as well, so we'll put them on the watch list. That stock was up 5% on the day. We also have Sprouts Farmers Market, which I don't think Chris has a position in, but I know he was interested in this one, if I'm not wrong, right? I think this is a stock Chris pitched to Steve a couple weeks ago. I don't think he ever bought it, but he was interested. So Sprout Farmers, we'll put that on the list, and we'll see what they say as well. S&P, where do we close on the day? S&P 684.53. So basically flat on the day. All of those hours of trading to go flat, which is better than down 2%, but the S&P kind of holding on. Palantir 134.89. That was flat on the day. Nvidia 187.90. Actually not too bad. Nvidia 187.90 after going all the way down to the 184 levels. So not bad for Nvidia. Tesla right there, 411. That was flat on the day. AMD, that was up about 1.62%. Amazon also flat. It moved a whopping 7 cents today, 204.86. Meta, 644. Meta actually made a move above 639. Yesterday was at 629, so that got some momentum. Rocket Lab, 2.9%. Not too bad, 76.58. Ondas, another green day, 3 days in a row, 2.89%. That was green. Grab, down about 1%. SoFi was down 1.23%. Walmart was down 1.3%. Walmart, 3 red days in a row. Domino's Pizza, that was up about 0.5%. The Googs was flat on the day. Klarna got demolished. 27% down. There's too many buy now, pay later jokes to make about this one. But yeah, this stock probably just shouldn't have gone public. I mean, $9 billion market cap absolutely got destroyed today from their earnings that they had in the morning. Apparently, they lost $211 million, and the street was not expecting them to lose that much money. So that one got hit. All right, Opendoor and Texas Roadhouse. Let's see what numbers we had. Live Nation actually had their earnings early. It was kind of weird. Usually, they don't do it early. Let me actually pull that up real quick because they did do their earnings a bit earlier in the day. So let's put up those numbers. It was actually relatively good, and the stock got a bump on that.
Dollars in revenue ahead of estimates of 6.11 billion, adjusted operating income of 194 million ahead of estimates of 187 million. Now, there is not an earnings per share number in this quarterly report, which is fairly typical of Live Nation. Now, looking at the different divisions, concerts reporting higher revenue than expected with a smaller operating loss than anticipated. Also, the sponsorship and advertising division reported both top and bottom line results that were better than anticipated. The earnings call is coming up at 5 p.m. Eastern, and we'll be listening in for any comment.
So relatively strong earnings. They beat on revenue. Nothing too crazy there. LegalZoom got there. Oh, Texas Roadhouse is down 3%. Don't have the numbers yet, but that is down. LegalZoom, that is flat. Revenue was $756 million. That was up 11% year over year. Adjusted EBITDA $172 million. And it looks like that is a beat on the top and the bottom. $203 million in cash, no debt. Free cash flow was $147 million. Sprouts Farmers Market down 4%. They beat on EPS, 92 cents versus 89 cents expected. Year-over-year growth of 16%. Revenue was flat, $2.15 billion versus $2.15 expected. Sprouts Farmers is down 6% on these earnings. We'll get deeper into some of these numbers, but no misses on the top or bottom line for Sprout Farmers. Opendoor, I don't have the numbers yet. Probably in about 2 minutes we'll get it. Texas Roadhouse initially fell to 174, then that candle went away. So maybe that was a bit of an overreaction, or maybe those numbers are not necessarily in yet. They sell things. They should be higher. That's fair. They do sell things. Oh, G-Rail also had earnings. Let me pull this one up. G-Rail, wow, 24%. If I'm not wrong, this is a biotech. Yep, this is a biotech. 24% down. Oh boy. Revenue was $43 million versus expectations. That was good. EPS, they beat by 15%. Why the hell is the stock down 30%? $100 to $74. G-Rail, they beat EPS by 15. They beat revenue by 0.2. They had to say something about their drugs. That was not the best. 29% on G-Rail getting hit right now. Ticker symbol GRAL. AKAM, Akami Technologies, that's down 9%. I actually don't know this one, but they also had earnings. $10 billion company, content delivery network, CDN. That stock's down 10%. Their earnings seem to not be the best right here. Revenue, a little bit better than expected, 1.09 versus 1.08. EPS, 184 versus 176. The outlook on EPS was lower than expected. Street wanted 731. They came in at 720. EPS Street wanted 175. They came in at 167. That's why Akami Technologies, that stock is down 9%. Opendoor, we got to move 5% up, 7% up. I don't have the numbers yet. It popped to 520 at one point. Now it's at 510. Wow. Opendoor missed on EPS by 1,045%. They lost $1.26. Street thought they would lose 11 cents. That's a little aggressive. And they beat on revenue by 24%. So the Street's paying attention more to the beat on revenue than to the miss on EPS. They missed by 1,000% on EPS. They did 200 million more than expected in revenue. Revenue is down 32% year over year. EPS is down 700% year over year. Yeah, that's not the best. Maybe the EPS miss is an accounting thing, and that's not as serious. But we will find out. By the way, do the Robinhood monthly metrics come out today? I think they do. I don't have the press release yet. I'll see if they're out. I think they do come out today. We already know the January metrics, though, because they put it out in the earnings. I think we get like one more piece of data, but nothing that's supposed to be that different. Opendoor is still up 7%. Still up 7%. SMCI was up because they might be the server rack of choice for Anthropic's TPUs. That came out in the morning. That's why that was green. Texas Roadhouse, revenue $1.48 billion. EPS 128. That stock is down 1%, not really moving. They did beat, it looks like, on the top and the bottom for Texas Roadhouse. It looks like they did beat, but you're not seeing that much movement. Dropbox beat by 1% on EPS, beat by 1% on revenue. That stock is up 2% after hours. That is up 2% after hours. Robinhood welcomes Dr. Naomi Boyd as chief economic advisor. Okay. I don't know exactly what a chief economic advisor means to Robinhood. Like, not like, is that going to be like Stephanie Gill that like goes on CNBC and talks about their thoughts or something? Let's see if we can try to figure out exactly what that means. By the way, today we should get the monthly metrics. We should get it pretty soon. What is a chief economic advisor for Robinhood? I feel like I should know Dr. Naomi Boyd. I feel like I've heard her name before as well. Okay, we got a couple other earnings, and then we'll get into some of that stuff as well. Fix, Comfort Systems. This is a big stock. This stock is flat after hours. Do I have their earnings? Yes, they beat. Wow. 38% on EPS. Street thought they would bring in $6. They brought in $9. Revenue, they beat by 13%, $2.65 billion versus $2.34 billion. Revenue's up 41% year over year. EPS is up 129% year over year. Fix, Comfort Systems, this stock already made a big run last year. It's already also up 40% year to date. So I understand why the stock is flat after hours. It's made a massive move. This is also in the HVAC space. AI has been a tailwind for them over the past year. It's up 250%. But that's a massive beat on EPS, 40% beat, and then revenue, almost 14% beat. Opendoor, are we still moving? Opendoor, 14% up. 14% up on Opendoor as that stock is catching a bid. Again, that revenue beat, I think, is good for Opendoor because, they beat by an extra 150 million. That's got to signal to the street that they're selling houses. Even if they're not making a profit on anything they sell, they are indeed selling houses, which eventually, if they work, they will get to GAAP net income. But it feels like the street cares more about their ability to get profitable. Dropbox real quick. Let's get some coverage on that. And then we'll keep going from there.
58 cents adjusted revenue ahead of consensus at $636 million versus the $629 million estimate, and adjusted operating margins also above the street. We have comments here from CEO Drew Houston saying we closed out 2025 on a strong note, exceeding the high end of our revenue and operating margin guidance and demonstrating our continued operating discipline. And that in 2026, he says, we'll be driving engagement and adoption of Dash, investing in future growth. Dash is.
All right, so Dropbox not really moving like crazy. G-Rail, I think, is the big one that got hit pretty bad. Opendoor still up 15%. Klarna down after hours. S&P flat. Sprouts Farmers flat. I don't have the earnings for Paladine yet. Texas Roadhouse flat. Akami down 7%. G-Rail 30% down. 31% now. Kind of ugly. Okay, Q1 26 for Opendoor. They're expecting negative 10% revenue growth quarter over quarter. They are expecting their losses to bottom out around $30 million. They lost $1 billion this quarter, but again, I think that's because of something in the accounting sector. That's also why that doesn't make any sense for their EPS to be that hit. So it looks like their losses are going to normalize in Q1. They expect to be profitable on a net income basis by the end of 2026. I think that's the reason the stock is up. Looks like the CEO is saying we will be profitable by the end of the year. I think that is why the stock is up. Now, Opendoor was profitable slightly back in 2021. And then obviously we had 2022 happen and rate hikes, which was bad for the business. But I mean, if he's guiding to be net income positive by the end of 2026, which is what I'm looking at, he's not talking about adjusted EBITDA. He's talking about net income on a GAAP basis. Yeah, the street should be excited about that. The street should be excited about that. All right, I don't see the hood metrics. It's not on their website. Nope, it is on their website. Here it is. Again, we saw all of this already, so let's see if there's anything new here. But let's pull this up. Margin balance is 18.4 billion. We already know that. Securities lending revenue was 34 million. That's something we didn't know. That's fine. That's what it's supposed to be. They bought, okay, here's some data. We've deployed 173 million to purchase 2.1 million of our shares for a price of 84. Robinhood has bought back $2.1 million of their stock this quarter so far, which is nice. It's just crazy because the stock is lower than 84. Even Robinhood was like, dude, we're buying the dip, but it keeps dipping. We're trying to buy the dip, but it keeps dipping. So they bought back about 2.1 million of shares. Equities, we already know, 227 billion. Options, 200 million. Crypto, we know that was down. Event contracts, 3.4 billion. We already know about that as well. So yeah, there's nothing new that we're getting here, guys. Yeah, the only thing new that we got was that share repurchase agreement clarification and total security lending revenue, which 34 million is up 36% year over year, which is what it needs to be. Okay, so that's what we got on Hood. I don't think Hood is really pumping on this. Yeah, Hood flat after hours. Opendoor, is it still holding? Opendoor, it's starting to fade. It was almost 20%. Now it's 10%. I think if they're really serious about becoming profitable by the end of the year, how is that bearish? I mean, that seems pretty damn good if they can get there. So I can understand why the stock is getting at least somewhat of a bid. Obviously, mortgage rates coming down would help them get there. SPY's flat after hours. G-Rail getting a little bit of a bid. It was down 30. Now it's down 26. LegalZoom flat. Dropbox flat. Akami down 7. Comfort Systems up 2. And then Texas Roadhouse basically flat as well. And it looks like that's what we have for earnings. Looks like that's what we got for earnings. Let's see if we can go to some of these websites and get some specific stuff as well. Let's see what they are saying. So we'll go to Texas Roadhouse. We'll go to Opendoor. Not bad in a tough market. Yeah, I agree. I mean, this is not too bad in a tough market with these numbers. Opendoor, looking at their website right now, trying to get a little bit more clarification. Did you short anything today? I did not short anything today. I don't have the Paladin earnings yet. I don't see them yet. We are focused on making the right long-term decisions to rebuild Opendoor rather than managing short-term guidance. We're making meaningful progress. Remain focused on execution. You can track our acquisition contracts on accounts accountable.opendoor.com. We expect a Q1 2026 adjusted EBITDA loss. We expect revenue decrease 10% year. Yeah, we talked about all this stuff. Nothing too different. Nothing too different. Texas Roadhouse. Let's see their numbers more specifically. Comparable restaurant sales increased 4.2%. Average weekly sales at the company's restaurants were 160,000 per week. Restaurant margins decreased slightly to 15.6%. Let's Command F weather and see if they blame the weather. No, they didn't blame the weather. They put it in the forward-looking statements, which is what you have to do, but they did not issue a formal warning about the weather like Cheesecake Factory did to explain some of their lack of growth. But they did grow. They grew pretty well. Revenue's up 3% year over year, which is not too crazy for a company at their size. They opened 9 new restaurants as well. Their capex was 89.2 million. They need to get that number up. Amazon spending freaking 200 billion. Texas Roadhouse needs to spend a little bit more on capex. All right, folks. I think that's what we got. That's what we got. Akami down 7, G-Rail down 27, Klarna's flat, Google's flat, Dropbox down 1, Comfort Systems up 2. Sprout Farmers actually goes green after going red. They did beat on the top and the bottom. Paladin don't have those numbers yet. Opendoor, this is the biggest winner of the day. That is up 13%. 13%. Copart also had earnings. I don't know what this company does. CPRT, that stock is down 10%, $36 billion company. What the hell is Copart? Multinational provider of online vehicle auction and remarketing services to automotive sellers. Okay, so it's a car selling website from my understanding. They missed by 8% on EPS. They missed by 2% on revenue. Revenue's down 4% year over year. EPS is down 10% year over year. Obviously, the 60-day subprime auto delinquency rates have reached a new high over the past 17 years. So that's not the best for the Carvanas, CarMaxes, or now it seems like Coparts of the world. But that stock down 11% after hours as well. Okay, that's what we got. Zoom out on Copart. How much is this up year to date? It's flat year to date over the past 1 year. Wow, it's down 40. I zoomed out. It didn't get better. I zoomed out. I did. I really did. It didn't get better. What about 5 years? Okay, 5 years is a little bit better. It's so funny. Like zoom out, you zoom out. You're like, oh, this is worse. But yeah, this stock down 40%. Copart is an online auction of used and wrecked cars, not a normal dealership. I think the automotive market, especially around delinquencies, obviously because rates are still pretty high, is affecting a lot of these companies. I mean, this is why Carvana, to an extent, lost more money on every car they sold, and they missed by 20 million on adjusted EBITDA. I don't think it deserved to fall 30%, but the car business is not necessarily the easiest business that we have right now. All right, let's get into Macro Thursday. It's been 2 weeks. We had a bunch of different earnings, so we weren't able to do it, but we got a lot to talk about today, a lot to discuss about what's going on in the state of macro, capex, CPI, jobs, all that good stuff. To help me analyze it, ladies and gentlemen, Mr. Christopher Patel.
What's going on, brother?
How are you, man? How you doing?
Dude, macro is macroing right now, and it's just driving everyone a little bit insane. Yeah, it's kind of crazy. On one side, you've got all of the news that's coming out that's kind of proving that we're headed towards disinflation, but then some of the policy actions that we're seeing sort of are inflationary. So the market's kind of like, what do I do? What do I do? And so that, and it being an election year, people are kind of weary. So they're like rotating into a little bit more value. So a lot of the companies that we're seeing, they're the ones that worked last year are not working nearly as well as they are this year.
So let's start with that conversation. And I want to give you some flowers here because everyone deserves their flowers, especially in a tough market. You have been pounding the table on this stock right here, Verizon. And I think your core thesis was, hey, it's low beta. And if there is a shift from growth to value, this is a stock that should get a bid. And it's not just Verizon, it's Walmart, John Deere, Caterpillar, a lot, Coca-Cola, a lot of these names, the value names are just up significantly year to date compared to Amazon, Nvidia, Meta, etc. The last time Verizon was up 20% year to date was 2006. So I want to give you the floor, and the open-ended question is, do you think there is a bit of a bubble, or maybe bubble's too intense of a word, but do you think there's a little bit of too much excitement from fund managers and institutional money managers rotating out of where the growth is into companies like Verizon? Do you think that rotation goes back to growth? And how do you think people should kind of be thinking of the increased level of fear around big tech and the optimism around companies like Verizon and Walmart and John Deere?
Well, the thing is, Verizon's a little bit different, right? In that they were structurally very weak compared to their peers in the telecom space. So under Dan Schulman, the market's initial reaction was, oh my God, like we've got uncertainty all of a sudden. And then Dan Schulman comes and says, look, we're kind of changing around a lot of our policies to be more value-based for consumers. So Verizon in the past has been so focused on the technology that they have really been neglectful of their consumers. And because they've been neglectful of their consumers, they've been losing market share to T-Mobile and AT&T. So the challenge that Verizon was having was somewhat unique. Now, Verizon is benefiting from three factors. Number one, because they're long, stable, cash flow heavy business. That's one thing. Number two, they can't be disrupted by AI nearly as easy as some of the other industries that are out there, right? So they're not getting any sort of like AI degradation trade on their business model. And then last but not least, when it came to Verizon's like longer term growth prospects, like the last quarter kind of proved that they're back in like the growth mode again, where they are going to target subscriber growth and
So,
go
so
with that.
I agree with all
yeah.
of that, but I think you can also acknowledge if we didn't have the growth to value rotation, Verizon might not have had that.
Yeah, if it wasn't the growth of value rotation, it definitely wouldn't be up 20%. It might have actually been up like 10,
Right.
So
Agreed.
So the reason why we do these macro analytics when it comes to certain stocks is that, the company has a level of performance that it's going to do naturally. You have good leadership, you have good stuff, but if you don't have the macro behind it, then you can sort of underperform or overperform depending on how you structure yourself.
Yeah.
So when we look at companies, we like to think that they are all operating in a bubble and a vacuum where the macro doesn't matter. But unfortunately, that's not how it works, right? Each company is going to be dealing with different things. Verizon's also got a lot of debt on the balance sheet. So if the prospect is in the future that interest rates are going to stay higher for longer, for a really long time, a company like Verizon is not the most attractive because they have those debt obligations, right? So we have to make sure that we talk about the macro, we understand the macro, and that especially going forward on a forward basis, we apply that to our investing logic. So
do
Verizon,
you now think there could be a rotation back to growth, or what are your general thoughts on if that happens or not?
So there's a couple of things with it. There's always going to be growth somewhere, right? I think we've got this like notion that big tech equals growth, and that's it. Like there's no other industries where there's any growth, right? And I think that's wrong, right? There are industries that are coming along. There are newer industries, but they could be considered growth industries. So you kind of have to be selective. There's also cyclical industries that are in short bursts, heavy growers, right? As an example, right now, oil and natural gas are actually killing it. Like Derek, I shouldn't say Derek. I don't know. Like, you've spoken about it. So Derek got into a really large position in Venture Global around $5-6, right? Yep. But he saw that, look, you're getting a company that's super oversold. It's infrastructure play. It can't be disrupted by AI. And at the same time, it's got the tailwinds of energy prices starting to kind of move their way up. So what happened? It went up almost 100% since then, right? So it's one of those things that if you watch the markets, there are times where rotations will happen. It just depends on, from a cyclicality standpoint, how you want to manage your risk, right? And which sectors do you want to be long on, and which sectors do you want to kind of take a break from? Venture Global, it had a significant upward move last year, but then they had some lawsuit issues happen and they got oversold, and now it's starting to improve again because the fundamentals are starting to get better. They also had one court case that they've had against them go in their favor. And since then, it's up 40% year to date. So, like I said, you have to be company specific, but then also look at the macro impacts of some of the stuff that's happening outside of that to get that really big, juicy boost to the total returns.
Before we continue with the growth conversation, we do have a headline right here. I want to get your thoughts on it. Wall Street Journal: Trump has not yet decided on the Iran strike. However, he is weighing a limited military operation, which would target Iranians' government sites and military. If Trump authorizes the strike, it could come within days. Iran is citing a 10-day window for the decision. I guess general thoughts on what you think could happen if we strike Iran.
Trump tends to be very pragmatic whenever it comes to these military conflicts, in that he gets right up to the point where he's like, it's a full-on invasion, and then he kind of like does it in a way that surgically takes out the problem and leaves us in a much better position. So as an example, when you look at Venezuela, right? We could have gone in there, we could have took out Maduro, and we could have said, no, we're going to start to invade and do like a regime change. But he didn't do that. He said, look, our problem was Maduro. We got rid of him. And then he told the successor, which is Delcy Rodriguez, listen, you either work with us or you're next. And they said, okay, we'll work with you. That's very, believe it or not, that's actually, from a military standpoint, that's actually one of the smartest things. If you look at what happened in Iraq, that was our biggest problem. We took out Saddam, but then we also took out all the Baathists who were in charge at the time. And so what happened is we ended up like splintering all of these different groups around Iraq, right? So the structure, that governmental, that organizational structure needs to be kind of maintained in order to maintain some semblance of public order. Because if not, then what happens is you create like all this giant power vacuum, and then things become really, really unstable.
You think it's not going to be some massive war with Iran or anything?
I don't think so. I think there's enough of a opposition feeling already in Iran by their local populace that right now you have kind of internal pressures from local people, and now you've got external pressures from the United States. So the leadership in Iran is in a very difficult position. The U.S. is also in a difficult position in that publicly they do not want to start another regime war, especially in the Middle East. Like, it's never worked out well for the U.S. So we better not really deal with it. Now the U.S., and believe it or not, this is all Israel. Like, Israel is the one that's really pushing for this, because Israel long term has realized the main backer, financially, is there's two countries. One is Qatar and the other one is Iran. They're both like notorious supporters of all the groups that are anti-Israel. So one of the things that Israel decided was, okay, we can only do limited strikes, but we don't have the same legitimacy as the United States does. So, maybe it's a coincidence, but Netanyahu was in the White House like a week ago. What I'm saying? Yeah. So what the Israelis are thinking is, look, we've got a president who's clearly pro-Israeli, pro-Israel. Let's use that to our advantage, especially while he's still in power. Convince him that, hey, if we end up decapitating the head in Iran right now, then the world will be a much better place. Everything will have peace, blah, 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 all that good stuff. I think the Israelis are pragmatic enough to know that Trump's authority is sort of being limited by the day. Right. I'm pretty sure that we've been watching all the polls and everything on seeing that the Democrats are, pretty much in favor of taking the House during the midterms. So that's one branch of the one part of the government, the legislative branch, like the House. Now you've also got some waffling on the Senate side, which is kind of crazy to see. So the challenge that you run into is, if you get Trump and Trump ends up being a lame duck, how are you going to work with him to do all this stuff? Right now, the Trump administration has complete control over everything. So I think what we're going to see this year is just this massive wave of actual change and volatility because of that, where the Trump administration is going to do everything in their power to try to stay in power. And that's going to also cause a lot of ups and downs.
Okay, I think that's fair. And I agree with you. Most of the time, the markets don't really dip that heavily on geopolitical stuff, especially if it's targeted. Big tech capex. You've been talking a lot about this over the weekend. I saw a bunch of your tweets. What do you think is going on? And do you think this capex is going to pay off over the next year?
I mean, the sheer numbers are staggering, right? I mean, you're looking at $600 billion. That's more than, I think the Department of Defense spends like $700 billion roughly per year, or it's probably closer to $1 trillion these days. But the point is, it is a lot of money. Now, everyone is questioning the ROI coming along, right? So the companies themselves, they're looking at this and saying, look, this is an existential opportunity for all of us. If we don't invest in it now, then we could end up becoming, basically second fiddle to the other guys. So it is a bit of an arms race, and that could mean that there's some over investing, but the demand is actually out there. Demand is very strong. Everyone sees it. The challenge that a lot of investors are having is, number one, the sheer size and volume of it so large that it sort of gets people to think wait a second, how many years is it going to take to pay back $200 billion from Amazon? Yeah. And then what happens is you've got these side projects, these open source projects from these Chinese frontier labs that are coming in, and they completely wreck the US's, or at least the research models, which Anthropic and OpenAI's future business prospects. by basically open sourcing everything. So imagine right now, the way I would phrase this is, imagine right now you have a drug discovery, right? Like you spent billions of dollars to find this one drug that cures this one illness. And you're thinking, oh my God, it's payday. I'm going to get paid. And then what happens? Some guy says, oh, look, this is the ingredients. This is the formula. They don't say that, hey, this is, I'm going to make a rival, company. What they essentially do is say, this is the formula. These are the ingredients. This is how you get to where you need to get to. And so now everyone else can just recreate that, right? So that's the challenge that you run into
to an extent, basically.
Yeah, DeepSeek, Quen, Kimi K2. So if you look at OpenRouter actually shows just how popular some of these other Chinese models are. Now, I know a lot of times the consumer ones, like consumer-facing ones here, especially here in the US, you guys are not thinking of that and saying, oh, I don't use Kimi K2. I don't use any of these other models. The thing is, from a developer standpoint, developers that have like AI features and everything else built into their background, they are using this. A lot of the whole thing with Claude, and we could talk about Claude too. Not Claude, but it's like, I think they call it OpenClaw now.
Yeah.
OpenClaw with AI agents starting to become more mainstream. People are wondering like, oh, what do we do now? The thing is, these AI agents are very like token heavy. So you need to optimize for cost. So a lot of these Chinese open source models, they actually fit pretty perfectly with the agentic AI narrative. So it's sort of weird in that there's still a lot of uncertainty around the total payoff of AI for the hyperscalers. And
Are you
are
bearish the capex or no?
I'm not bearish. I think that, these companies are smart enough to know what their future demand is going to be. And I think they've already got a lot of those contracts in hand. So it's not like they're building into into like the .com bubble where we saw like fiber, where fiber was built. Like, it's like, if you build it, they will come. This is a little bit different in that they're all here. They need this shit. Let's build it. So there's a kind of a big difference between the two scenarios. The only challenge that I guess you would kind of face is that the customers are here today, but are they going to be here at the same rate tomorrow and then the year after that and the year after that, especially if the cost of inferencing drops like as dramatically as what Nvidia is kind of like telling. Like over the weekend with this DeepSeek model that you saw, they were using Nvidia's H100 or B3, whatever. But the efficiency gain was like 45x cheaper. So it's like, whoa, wait a second. Like you were projecting X amount of inferencing happening at an X amount of price. And then all of a sudden now you can get something at, pennies on the dollar. So the challenge here is kind of like a multifaceted approach to how AI is going to be monetizable in the future and how much ROI there is. And then of course you've got the Cassandras of the world, like Burry, who kind of put it out in the ether that, hey, this thing's giant bubble, Nvidia is going to go down, and they have some street cred, so people wonder, it's like, oh, wait a second, no, this guy called it .com bubble, so maybe he's right, maybe he's seeing something I'm not seeing, and so the market is taking that to heart.
How are you thinking of Nvidia then? Because you are long Nvidia.
Yeah.
I mean, they're probably going to put up 70 billion in revenue, guide for another 75 billion. They're going to beat every expectation. Do you think the market keeps discounting the earnings because they really do think it's just cyclical, or what do you think is playing out here?
I think the challenge that you would run into, like I'm long Nvidia right now, but there is a point this year I do think that I'm going to unload some of my positions, only because I feel like if the ROI argument keeps hammering these big tech names, they're sort of going to be forced to have some cost rationalization in 27. Like Amazon's spending $200 billion. Like Google is taking on 30 billion in debt just to finance this AI build out. At what point does Google say, hey, wait a second, like maybe we need to let the demand, finally like let all the bottlenecks catch up, right? Like remember, these companies are building, but they're building into some real challenging bottlenecks. Number one is the grid, right? They have to build power plants, and they've constantly been getting hammered by locals about electricity prices. Then you've got RAM prices and availability of RAM. So, you know, you have kind of this multi-layer cake that you have to kind of like cut and try to piece together and figure out like, okay, is this going to mean that there's going to be a slowdown in growth, and how big of a slowdown in growth is there going to be for Nvidia in 2027? So right now, Nvidia looks like it's going to be growing 60% year over year. It's probably going to maybe even do more than that. But remember, the market is always forward looking, right? So if your guidance for 2027, as we get closer and closer to, you know, the end of the year, is like, oh yeah, maybe next year there's going to be, you know, 70 billion. I mean, 70 instead of 60% growth, there's going to be like 20, 30% growth. Then people are going to kind of, you know, challenge the narrative and saying, wait a second, I'm not going to pay it 30, 40 PE for a company that's only growing at 10, 20%. And the thing is, the size of Nvidia has gone kind of pretty big. It's almost a $4.5 trillion company, you know? So,
okay. So, but okay. So this gets into an even deeper conversation then. You've heard every CEO say, we got to spend a lot of money. You've heard, and we'll talk about Amazon, but you heard the AWS CEO say, like, if we had more compute, we would be growing even faster after reaccelerating AWS. You see OpenAI probably getting ready to do a $1 trillion IPO. Anthropic is growing revenue 10x. The Anthropic CEO Dario says that companies will probably be spending trillions of dollars a year on capex by 2029. I mean,
and BMNR was supposed to be $100 right now. What happened?
No, it's fair. Like maybe that doesn't play out. But when you see the smartest people in the world spending as much as they're spending because
they're talking their Amit, they're talking their book. Like if you ask a chef, oh my God, like what's the food at your restaurant like? The guy is not going to tell you, yeah, you know what? Sorry, it's gone bad. Don't eat here today. They're always going to talk their book. Do you expect any of them not to be bullish? Like, do you expect Jensen to come out and say, hey guys, guess what? I think next year we're going to be saturated. We might not grow nearly as much as we grew this year. Do you think he'd actually come out and say that?
Look, it's a fair point. It's just, I guess at that point you have to call BS on some of what these CEOs are saying. But and that's fair. It's important to be skeptical of that. But then when you look at Anthropic's growth rate, 10x for the past 3 years. I don't know if they're going to do a 10x again, but if they even get close to that, I mean, they need more compute.
I would say take everything these guys are saying with a grain of salt, especially considering that the IPOs are around the corner. Okay, IPOs are a great time to raise a bunch of capital from everyone. And if you just take the most optimistic projections, then you're really missing out on things. And how many IPOs have come out and basically fallen flat? So I'm not saying that that's going to happen with OpenAI and Anthropic, but just know that, you know, just because like these people are saying something is going to happen doesn't mean that it naturally happens. And it might not happen in the same timeline as they're expecting, right? Let's say the economy goes south and people are like, you know what? We just don't want to invest more money into these things. Like the credit markets start dumping Google, Microsoft, Amazon, and all of these guys. You think Amazon, Microsoft, they're going to say, you know what? We see this AI thing coming along, but we also have shareholders and we also have bondholders that we have to contend with. Like Oracle is sort of getting screwed over right now because of that. Oracle.
But why would these companies raise the debt if you think they're going to cost rationalize? Wouldn't they hold off on even tapping the credit markets right now if they were ready to slow down?
I mean, there's clearly demand right now, right? Like right now you can clearly see the demand. But once again, no one can see 2 years, 3 years, 4 years out with 100% certainty and clarity. If you have that ability, bro, that means that you shouldn't even be in like the markets. You should be in Vegas right now, putting numbers out there. So I think, like I said, these guys, they project optimism because that is their job, right? They are going to give you the most rosiest scenarios. It's our job as investors to say, do I believe in this guy? Do I not believe in him? And then layer on the macro, which is, can the economy support this level of spend? Do the credit markets agree with these companies to have this spend? When Oracle came out and said, we're going to spend all this crazy amount of money because Larry Ellison said there's going to be so much future demand. Well, guess what? People didn't think for a second, like, hey, are the credit markets going to like this? Are the credit markets going to allow this? And what happens to the stock? right?
No, it fell 50%. Yeah.
So we, like I said, we want to believe these guys, and these guys are, always going to project out a lot of confidence, but it's our job as investors to say, and at least show some level of skepticism in our approach to investing. Because if we just use a little bit of what is it called? I don't know. I don't want to call it common sense, because it's not common sense. A little bit of logic and a reason, we may not get caught in something like this.
So let's take your argument to the extremes, and let's say capex materially slows down next year. Let's say this is the last year of real big tech capex spend. Big tech is not going to be affected. It's Nvidia that's going to get killed if that happens.
Yeah.
Right?
Yeah, exactly. And that's one of the things that I posted on Twitter, which is at some point people are going to reward cost optimization rather than just unlimited spend, right? Like right now, Nvidia should theoretically be the beneficiary of all of this, because, if everyone is buying ARMs and Nvidia is one of the primary suppliers, then everyone's like, oh, I should be buying Nvidia. But the thing is, if you're an investor, you're looking at this and saying, at some point, the customers, they're going to get tapped out. You see that free cash flow chart that everyone posted, that's not a good sign. That means that there's so much money going out the door in a lot of these companies, they're eventually going to be running out of cash to do a lot of the expansion that people are talking about. And then, like I said, it ends up becoming, how do you keep spending this money? Well, there's only three ways that you can raise the capital. Number one, you issue a ton more shares and dilute shareholders, right? Number two, you take on a crap ton of debt, right? And then number three, you get some sort of like circular financing deal that, that supports the spend, but it's a weird, number three is a very hard thing to do, but the first two are not good for shareholders. So right now, because of that, everyone is looking at, and here's the other thing. When it comes to it, like big tech capex this year, is it going to be higher or lower than next year? I think next year is going to be higher than this year. Okay. I'm not even saying that it's probably not going to, but it's not going to be a 60% year over year growth rate. Like, do you really think Amazon?
It doesn't need to be $1 trillion, but if it's like 700 billion next year, I think that keeps
right. But if they're doing 600 this year and they're doing 700 next year, what's the growth rate slow down to?
Well, no. The rate of growth will slow down. I don't know if that means the market's going to pummel Nvidia by 50%, because it seems like the market will rationally expect Nvidia to slow down. But if they're going 36% instead of 50%, that's, as a $5 trillion company, okay, right? That's not Nvidia gets cut in half by 50%, like Burry is saying.
See, that's the challenge. No one really knows, right?
Well, so let's paint that scenario. How do you think Nvidia, just as a thought experiment, people in the chat as well, how do you think Nvidia gets slammed by 50? How does Nvidia become a $100 stock? What do you think would have to happen?
You would have to have guidance come out from the hyperscalers that they are not spending more money next year than they are this year. If Google says we're spending X amount of dollars this year, and then they come out and they guide, we're going to spend the same exact amount, or we're going to spend $20 billion less, Google is going to rally and Nvidia is going to take a dump.
Okay, so then the question becomes, how much of a dump? And your point is it's not going to matter because the narrative is going to be capex cycle is topped. Basically, that's what you're saying.
Yep, pretty much.
And you think that could happen 2028?
It could be 2027. It could be 2020. I don't know, man. I mean, this is where investing becomes hard, right? And it's not always me that has to be the one that drives this. I really don't care. I think when I look at this, I look at three things. Number one, what is the availability of credit to spend? Because now these companies are running into free cash flow problems, right? Like you're hitting points where the companies don't generate enough internal cash flow yet to support the capex spend that they currently have. At least not to the umpteenth level that they've raised it this year. So that's number one. Number two, if there are any other DeepSeek like moments and AI, things coming along, then you got another problem, right? So you've got, something that maturely changes the unit economics of inferencing and research and everything else, in which case now you got a problem. And then last but not least, usually in, maybe whenever you have these IPOs come out, that's typically a good sign that there's going to be a top. That's the top.
I agree with that. 100%. Especially the value of these look kind of stupid.
Yeah. So whenever these things come out, it's kind of insane. And then I don't know, that maybe the market, and the other thing is too, like from a legislative standpoint, we could have some major changes next year. Like right now, this administration has been very supportive of AI and big tech. Next year, if what is that thing called? If the Democrats take control of the legislature, they could theoretically at least hamper some of the growth prospects of these big tech companies. And then if, let's say in 2028, we have an election year, and then after that we get sort of more, how do I say, left-leaning president who's more about trying to regulate this industry and cut back on what is it called? Cut back on centralization of power among big tech. You got another problem. Remember, look at what happened to Google. Google for the longest time was getting absolutely hammered in terms of its valuation because of this whole breakup scenario. These companies right now, Nvidia, Microsoft, Google, Amazon, they are the largest companies in the United States. They have more I dare say they have more power right now than the US Congress does to a certain degree.
No, 100%.
Yeah.
100%.
So the one thing government hates is companies like this, existing to the degree where it kind of challenges their authority. And then, of course, there's this whole talk of fairness as well, where there was this quote that I saw the other day. It was, if I take $500 from a rich man and give it to 5 poor people, give $100 to 5 poor people, I only lose 1 vote, but I gain 5.
Yeah. No, you're not wrong. And I do think, Biden was the one who put in the diffusion rule that stopped Nvidia from selling to the Middle East. So there's very much a chance that Congress, if it's controlled by the Democrats, could be a headwind. What is the optimistic side of capex that you see, and how are you playing it? Is it just long Amazon? Like how are you thinking this ends up working way better than the bear case?
I see these companies as material, they're going to benefit, right? At the end of the day, regular cloud growth was going to do 15-20% a year over year for the next 2 decades. There was no slowdown in regular cloud compute, right? Everyone was going to be switching from on-prem to hybrid to cloud. So that industry was just going to grow. Now, AI sort of supercharged a lot of the growth prospects for companies like Amazon. So you saw AWS kind of reaccelerate a little bit, and that's one of their highest margin businesses. With Meta, you saw AI targeting coming in and helping them grow their top line significantly. So that's helping them. Google's got all these models, and they've got all these tertiary businesses that utilize AI. That's doing its thing. Azure, because of its relationship with OpenAI and these newer tools, that's growing. So the hyperscalers are going to be fine long term. I don't see any, the one thing I'll tell you about the hyperscalers, they are smart enough and they're capital intensive. They generate enough free cash flow that if they need to pivot in any direction to kind of keep their growth momentum going, they can do it without any sort of issues. Other companies, they run into that challenge where, they make good money, but they can't pivot. They can't pivot into any other direction. Big tech, especially here in the US, bro, Amazon right now is spending a bunch of that capex, that $200 billion, to launch satellites to do a constellation for internet to rival Starlink.
No,
that could be a whole business line for these guys. They've got Zoox. Google has Waymo. Waymo's growing like wildfire right now.
Okay, so when we think about that much of a diversified perspective in Amazon's business in particular, with the capex spend, and then we think, people in the chat mentioned robotics, which is a big tailwind for Amazon, obviously for Tesla, but also for what Jensen has laid out as multiple S curves over the next 5 to 10 years that will only increase the demand for these chips. How do you rationalize that? Because for Amazon,
he's talking his book, bro. He's talking his book.
You just don't believe that at that
point.
No,
I'm not saying I don't believe him, but I'm in a place where I'm like, okay, great. Show me. You know what I mean? Everyone is going to throw out optimistic projections. The world is always going to change. Tell me one time in this history of this planet where everything was utopia forever.
No, I agree with that. But if part of the bull case for Amazon, which we've talked about extensively, is robotics, and that means a lot more compute, a lot more GPUs, a lot more chips. Yes, Amazon might make their own with Trainium, et cetera. But like, wouldn't that be one of many tailwinds to keep the capex cycle going? Or do you think it's just too optimistic to be able to project that right now?
It's too optimistic to project right now. Like I said, the guy is going to talk his book. We have to make sure that as investors, we're discerning. We're discerning what these people are saying and actually putting it into real practice. Like I said, if you're the head of a business that sells chips, the last thing you're going to say is that, hey, we expect chips sales to slow down in a couple of years. He's going to say everything in his power to keep his company doing well. And it's fine. I mean, that's what you're supposed to do.
That's fair. We got a clip from Trump real quick. He is live, and then we'll get back to other stuff. This is Trump talking about the stock market.
They said he's got a small possibility. I don't know how many of you people watch the stock market, but if the stock market's good, it's good for everybody. It's good for you, good for everybody.
All right. And then this clip around affordability.
I'll disagree with that, but go on.
And then I have to listen to the fake news talking about affordability. Affordability. You notice, what word have you not heard over the last 2 weeks? Affordability. Because I've won affordability. I had to go out and talk about it. But we inherited a mess. We inherited the worst inflation in history.
Your thoughts?
Well, number one, I am an investor in the stock market. I am doing extremely well. Like, I'm happy, right? Not everyone is invested in the markets. I mean, I believe that a lot more people should get involved in it and, and at least have some level of exposure to it. And in the United States, we do have a good amount of people that do have exposure, but there's also a lot of people that are working 2 and 3 jobs, and they're not seeing any sort of benefit from the capital appreciation of assets that they have, right? Like me and you right now, we're doing well. We have assets that are growing constantly, that are, building our net worth and building our wealth. Other people are struggling. They've got all sorts of loans. They've got all sorts of day-to-day issues. And for some of them, working 2 jobs isn't enough. And I think that's a challenge, because when you have a society that sort of creates this unequitable balance, you could have long-term ramifications, and especially the ramifications end up being something like, Mamdani and AOC is taking over certain parts of the government. Right now they've taken over localities. Like New York City has been taken over. Like you're talking about the center of capitalism here in the United States is being run by a socialist. Like, how does that happen? Well, the reason why it happens is because the difference between the rich and the poor in New York is so extreme that now all they have to do is just say, hey guys, I'm here to help you. I'll take money from that guy and give it to you. And what does everyone do? Shower them with votes, right?
So do you then think that he's focusing on the wrong issue when he keeps? We got one more clip right here where he keeps bragging about the stock market, basically.
This country is an
he's using it. Trump is very good in that he's using the barometers that are positive in his I don't want to call it propaganda, but that's exactly what it is. It's propaganda, right? When you take the numbers that you like, that are, what's the word? That are supporting your case, then of course you're going to do it. Right now, there's other metrics out there, like the number of jobs that have been created since he's been president, that are not good. He's not saying any of that. Right? He's not highlighting that like, oh, we could be doing better with jobs right now. No, he didn't highlight that. It's like, oh, look at the stock market. It's doing really good. I did that. But remember last year when the stock market was down, Biden did that.
No.
So that's better looking than your crane. I like the family better than the crane. Very good. But a good family. The stock market has set 53 all-time record highs since the election. 53.
Thank you.
Think of that.
Thank you.
53 days, it was at an all-time record, adding $9 trillion in value. You got to go back for a second. So we do over 18 trillion in 11 months. And Sleepy Joe, for 4 years, did much less than $1 trillion. Think of that. This country would have been dead. Adding $9 trillion in value to your savings. I added $9 trillion, and your retirement accounts and 401ks are at the highest level they've ever been.
Do you think that argument will be convincing when people vote? That I know most Americans aren't super educated about the stock market, but they can kind of understand their retirements and 401ks are up.
This is a double-edged sword, Amit. The reason why it's a double-edged sword is because if you're using the stock market as the barometer for your success, if the stock market goes down,
Yeah,
what's going to happen?
Right? There's a Trump put, right? He literally,
Yeah.
if the market goes down, he can
Yep.
brag about nothing. No jobs, no stocks. I mean, what is there to be excited about?
And that's one of the reasons to be bullish this year if everything gets sold off. If we get another Liberation Day and things are down 14, 15%, you best believe Trump is going to come in with his buy the dip tweets, and then it's going to be like, hey, we're back on like Donkey Kong. So the one good thing is that we have the Trump put limiting some of the downside. We also have the tailwind of a lot of tax policies too, that are very positive for growth. So I think the people who are like really negative on the economy, they need to, sit back a little bit and be like, do you really think with this much liquidity coming in, the prospect of future rate cuts coming into the picture, you got the tailwind of all this AI capex, you think we're going to be in a recession? Like, no, we're not going to be in a recession. We're going to be fine. I can't say the same about 2027, but at least this year, I think we're good.
Do you think Kevin Warsh is bearish or bullish for the market?
I don't know, man. It's easy either way. Some people are saying that he's like a Trojan horse, right? Where once he gets, because his commentary in the past has made him seem very hawkish, but he tends to be hawkish when there's a Democrat in charge, and he tends to be very like dovish when the Republicans are in charge. Like they did an assessment of his hawkishness to his dovishness, and it's been basically when the political parties were in charge.
Yeah.
So, maybe Trump picked him because he is a loyalist. I don't know. I think
I was with you the day we were getting coffee, literally when we got the announcement. And
the markets were selling off.
Markets sold off immediately. We thought it was Rick Reed.
Yeah. Well, that's the thing. People thought that based on his past comments that Warsh would not be good for the economy. But once again, when you look at the data, he tends to be hawkish when there's a Democrat in charge. Right? Like that's the definition of like a Fed chair who's sort of like your political friend, right? So the thing is, okay, this is just my theory, okay? I don't know if it's true. He could be the biggest landmine for the Democrats going forward. Why? If the Democrats take power in the future, and Kevin Warsh, he's still going to be the Fed chair because Fed chairs last a long time, what's going to happen? You're going to have a hawkish Fed chair during your freaking political timeline, and now all of a sudden you're basically going to be fighting the Fed. So the Democrats are going to be kind of like stuck. I mean, I'm telling you, I think he's like a fucking landmine to this. And what happens? The economy goes south under the Democrats' watch, and now you get a Republican for the next 20 years again. I mean, that's a great strategy. That's what I would do.
Did you see an article, by the way, that compares his hawkishness or?
Yeah.
Okay, I want you to send it to me because I would love to see that. By the way, I don't know why AppLovin's up after hours, guys. Unconfirmed rumors suggest OpenAI mentioned today on their capital raise that they're now starting to work with AppLovin on monetizing ChatGPT through ads. That's your rumor. OpenAI using AppLovin's technology to monetize ChatGPT through ads is potentially that App Social Network headline in the morning that didn't really pump the stock too much, but 7% after hours on potentially working with OpenAI. That could be a reason here. All right.
There you go.
So
Check it out.
there it is. That's crazy, dude. Wow. That's incredible. Yeah, he was hawkish during Obama. That was after 2008. Yeah.
You see what I mean? Obama takes over, hawkish, and then Trump wins, dovish.
Okay, so I guess let's talk about how you think. Well, we already talked about Amazon. You're bullish on Am. Oh, yes, this is what I wanted to. PayPal. Why the hell are you going long PayPal? What is so exciting about this to you?
It's too cheap. It's deep value. That's it.
Is it deep value? Like, how serious are you on your conviction on this one?
I think it's going to be okay. You know, people are worried about PayPal. I think it's a slow melting ice cube, and people think that it's melting so fast that it's not worth anything. And I'm like, no, I think it's a slow melting ice cube, and you know, there's value that you can put on a slow melting ice cube. Right now, you're looking at a company that's trading at like 4 to 5 EV to EBITDA, right, on a forward basis. And they're buying back shares at about $6 billion a year. You got a 30% discount to where it was trading before. Look, I'll be honest, and I've said this to people. PayPal is a trade for me. Okay, I don't think there's like a long-term prospect where I think PayPal somehow becomes the juggernaut that it used to be. And my expectations are very real with PayPal. And especially in the options side, PayPal makes a lot of sense because the risk to reward is heavily tilted in my favor. Right. So when you have a company that's buying itself back at about 6 billion and the market cap is 36 billion, you're looking at taking out a good portion of your own market cap every year. The options that I have are for 3 years out. So you're talking about basically the company buying back half of the value of the company that it is today and still generating future returns. So those cash flows have not disappeared. So I think a lot of the people on the PayPal trade that got burned over the last couple of years, they've sort of been jaded by this. But I look at this and I'm just like, yeah, you know, the situation has been de-risked significantly. I could be wrong, of course. You know, there's never a guarantee that they've got pretty stiff competition from all the other fintech players out there. They've also got competition from Apple because, you know, with branded checkout before it was, you know, you would go to PayPal, you would sign in and you do all your stuff. Now with Apple Pay, you could just click done, show your face out of the way. So their branded checkout function is slowly getting cannibalized by some of these other players. But then they also have growth in Venmo, which doesn't monetize at the same margin, but it is still growing. So I don't think that there's a lot of growth ahead for PayPal in terms of like top line and even bottom line. But in terms of shareholder value, there's a ton of value because basically you're buying back so many shares, you know?
I think it's not a horrible thesis. And I think qualitatively there's some issues with PayPal, but again, to your point, a lot of it's been de-risked. I mean, if it's going to $20, okay, but it's down a lot.
Yeah. No, I mean, dude, this company still generates a very healthy cash flow. They've got no debt on the balance sheet. So there's no risk of any debt maturity walls coming its way. You know, they've got other business lines that are coming in that are high margin that could monetize and basically slow the bleed even further, like their ads platform. Yeah. That's something that's brand new to them. And that's something that could grow. They've got sort of like some AI tailwinds behind them with agentic e-commerce. You know, they've got a partnership with OpenAI. So, and they're still globally, they're still utilized pretty heavily. You know, they've got almost 450 million users on this. I still use it. Do you still use Venmo? Do you still use PayPal?
Not that much, but 100% every month I make at least a couple transactions on those.
Yeah. So, I mean, you know, even if, like I said, even if the business is slowly dying or at least dying at a very, very slow pace, but at the same time, it generates so much cash flow that they can sort of provide value to shareholders. It's not a bad investment to make. You know, like I said, if this thing was still $50-$60, I wouldn't be in it. I told what's his name? Roy. I told Couch, I'd be like, No, I wouldn't be interested at $50, $60. That means that it's like pretty fair value. But if you're talking at $40, minute, why not?
Is it time to buy SaaS?
We're getting there. We're getting close. But I would not buy the index, because the index has a lot of companies that are likely to get disrupted. I think this is where you have to be selective, and you actually have to hit the right companies within the sector that theoretically that actually do have a durable software moat that it's not going to be penetrated by AI to the same degree that other people are saying right now. And some people are actually questioning the vibe coding narrative with these AI agents. It's been 2 months since these things came out. If you've got 6, 7, 8 agents working on these products, where are they? Give me one that shipped.
What's a SaaS name that's actually, and put in the chat as well, is there 1 or 2 names that's like a no-brainer for you? And is there a price target that makes it a no-brainer?
ServiceNow makes a lot of sense to me, but I'm not in it because I still think that there's a little bit more pain to go. Their valuation is fair. I wouldn't say it's undervalued. It's fair. They're still growing at 20% year over year. Their CEO basically has said, we're going to be very supportive to shareholders. The board canceled all of their compensation plans. So I think ServiceNow at this price is fair, but the narrative is still out there. So I think that the market could actually push it into discount territory in the next probably like few months. In which case, if you do see some consolidation and it kind of starts to have like some support levels on it, then that could be the bottom. As of right now, I don't see the bottom. The bottom is not there yet. Adobe is definitely hitting value levels though. Like you can look at them on a forward basis and Adobe's like cheap relative to the power that they have and the moat that they have around their ecosystem. So Adobe could get cheaper, but I don't know how much more cheaper Adobe can get, because they are naturally slowing down their growth. Adobe used to grow naturally about 20-30% year over year, and they continuously grew at that, and then they kind of slowed down to 10%, and right now they're growing at about 10. They might slow down to 8% growth. But if you scroll down on it, you'll see like the company's at like a 15 PE right now, with a company that buys back its shares like at a crazy pace. So at some point, even Adobe is going to get too cheap to buy. So right now, my focus is primarily in terms, like if I had to make like a gut call, I would look at Adobe, but I would wait until the bleeding is stopped and there's some consolidation, and then there's signs that this agentic AI narrative is not as strong as people are believing it to be. And then in which case we could get sort of a deep seek kind of moment where people like, oh, wait a second, these AI agents, they can only do so much. These applications are here to stay. There's no slowdown in revenue. There's no slowdown in growth. They become the value companies, and boom, now all of a sudden you've got a secular tailwind that sees these things get back to all-time highs over the next 3 to 4 years, in which case you just got a 70% discount on a cash flow asset light business.
No, I agree. And I think that moment is coming soon. I wonder where, like, does Adobe have to go to $200 for that to happen? But it would be interesting to see at what point the market turns.
I would hope that there's some sort of macro level event that causes fear and panic with the indexes selling these things off. That would be perfect. Whenever the entire, like, some people here, and let me just drop some game real quick. Whenever you see a company go down, that is not when you should be happy. You know why? Because usually if an individual company is going down, that means that there's a reason why it's going down. And the reason is likely pretty sound. But when you see the entire market go down or an entire sector go down, that is the best time to buy.
Yeah. Agreed.
Why? Because you're getting a great deal on some great companies that are getting thrown out with the bathwater. The regional banks. 2 years ago, I was screaming at people like, look, the entire sector is down. You think regional banks are just going to disappear overnight? No. Find the best regional banks, buy the shit out of them, and wait 2 years, and you'll see them get back to all-time highs. And that's exactly what happened. Look at what happened to Truist. Look what happened with what is it called? PNC. You know, all of them, they came back nicely. Bank of America, Chase. So this is where, don't celebrate when your company goes down, celebrate when the sector goes down, because there are companies within that sector that eventually will come back. And when they come back strong, and they come back with less competition.
Yeah. And I think a lot of us have at least lived through one of the cycles where, I mean, Liberation Day to an extent was where everything gets hit unjustifiably. DeepSeek was another one of the, like, when you see that happen, given the amount of algorithms that control the market, which on the Market Open we see every day, like everything's going up, everything's going down at the same time, it's not a stock specific thing. And that is when you should get a lot more excited. And so far this whole year, I think the drawdown has been SaaS, if that's the biggest sector, which is a SaaS thing. It's not a Salesforce thing.
Yeah. Yeah. And like I said, that's the best time to find these great value companies that are out there, because that means that things are getting sold off, not based on any fundamentals of the company that, you know, that are broken. They're getting sold off because of narrative. You know, narratives can change. Companies' business models can't, right? Or at least they can pivot to some degree to confront the new reality of things. But yeah.
All right. I was going to say we have 10 minutes. Let's do some rapid fire with Chris, and then we'll be done for the day. Supreme Court tomorrow. So you can put your questions in the chat. Supreme Court tomorrow, good or bad if they get rid of the tariffs?
No clue. I don't know. I don't know how the market's going to react to it. If they get rid of the tariffs, it would be good because there'd be a lot of trade. But then, of course, if it's the other way around, then we have all this money that we have to pay back. I don't know. It could go either way.
Sprout Farmers, did you look at their earnings yet, or?
No, I saw that they were starting to recover a little bit, but where are they?
Down to 1%. Nothing crazy.
Okay. Yeah. No, I like I said, I like this company. It's got good fundamentals. It is still growing. It's a prolific buyer of its own shares. It did get significantly overvalued over the last couple of years because it was growing so much, but then it's pulled back, right? And it's starting to get back into value territory. So, you know, whenever you see these things where people get uber bullish on something, just know that, you know, just be cautious. But then what also happens is you've got this giant pendulum swing in the other direction. And I think this thing is probably going to have a nice return long term, but you have to wait. You have to find the bottom. You have to analyze the business model and see where things go. They've also got a lot of competition, you know?
Yeah.
So
did you own it or you don't own it yet?
I don't own it yet. I'm still doing my research on it.
Fiserve, you see some of the big guys getting into
I
it.
have Fiserve. I have a lot of Fiserve. Fiserve is starting to make the transition back to what made Fiserve great in the first place. You know, like make America great again. Well, make Fiserve. You've got the new CEO. He's basically make Fiserve great again. Now, some of these companies, they rode up significantly. So do a 5-year chart of Fiserve. And so you see that giant move up in 2005. They had some one-time events that caused that massive spike up, right? And so what happened was that massive spike up was then supported by a CEO whose compensation package was very much tied to the performance of the stock. And so they made some moves that were very short-term in nature. And those short-term moves cost long-term shareholder value. Now, the good thing is you've got a new CEO who is in the process of, you know, re-examining everything and repairing all the damage the last CEO did. So here's an example. Let's say you're the CEO of a public company, right? Your incentive is you need to get the stock price higher. So you say, okay, you know what? I'm going to raise prices on all my services by 10%. I'm going to boost my earnings that way. And then every extra dollar that I get, I'm going to do share buybacks with it. Now, in the short term, it works really good, right? Like, oh, look, I just got all this cash flow. And then next year, you're like, man, I need to like hit the pedal even harder. fuck it, raise prices on everyone 20%. And Fiserve is so connected within the banking space that a lot of people kind of just said, shit, it would cost us more to strip everything out than pay these guys, 20%. So let's just pay them their 20%. So now the CEO is like, I was able to get away with a 20% raise. This is good. And so once again, the guy makes a crap ton of money. The problem is at some point, you're going to screw yourselves over. The other thing the guy was doing was issuing a lot of debt and buying back shares at a very, very expensive price. So if you're buying back your company at when the company is undervalued, that's value, their shareholder value accretive. But if you're taking on debt to buy back shares at like a 30, 40 PE when normally your company grows at, or normally trades at a 10 PE, dude, you're doing a disservice to future shareholders. And so that's what happened with Fiserve. They took on a lot of debt. Now this new CEO is saying, look, I don't give a shit about the short term. My job is I am going to repair this company long term. What does that mean? That means, number one, we're not going to buy back as much of the shares. Instead, we're going to focus on paying down the debt that we took on over the last 3 years. So number one, they're paying down their debt. Always a great sign for shareholders long term, right? Number two, they're working with consumers to roll back a lot of the price hikes that they had. What does that mean? That means that your earnings are going to be impacted, right? So that's not good. But once again, long term, if you think about this company, that's a good thing. You don't want to lose customers. And then at the same time, you've pretty much got the company trading at valuations that it's never traded at in the history, for the quality of the business that it is. So you've kind of got three tailwinds behind you over the next probably several years, which is you've got improving fundamentals on the company side. You've got a CEO whose vision is more long-term, and you've got a stock that's very undervalued relative to its importance and history. So this is not a V-shaped recovery play. So if anyone's thinking that this thing is going to be like $70, $80, $100 next Tuesday, like, no, this is a really, really pure turnaround play. And I think a lot of the investors, especially the bigger investors, they got in, pretty recently. And, and they see what I see. They've got a lot of activist investors coming in, which is a good sign, and the activist investors have all kind of like been very supportive of the new CEO's plans and goals. So, yeah.
Your 30-day wash sale period is over on BM&R. Are you buying back in?
Not yet. There's just so many other opportunities out there that fundamentally I don't need to be speculative this year.
Yeah.
You know what I mean? There's times
BM&R was speculation for you, and now you're just like, well, do I need to get that risk on with these opportunities?
Well, the thing is, I'm not opposed to making bets on momentum, okay? But
the momentum,
the momentum's gone. And at the same time, there's other opportunities in this market that, unfortunately, one of the reasons why I sort of got shafted in BM&R is because, number one, I'm human. All right. If anyone here in the chat, you think you're not human, bro, we're all human. You could be the best investor on the planet and still get into the most, dumbest investments at the wrong time. And when I heard Tom Lee, speaking about it and all the legislation behind it, and then you had Larry Fink and all these guys talking about stable coins, I'm like, man, you got the government on this side, you got freaking private capital on this side, you got Tom Lee, who's the oracle right now. He can do no wrong. He's talking about, I'm like, bro, this has got to be something that I'm not, and then you've got all my friends like Steve talking about it. So I was like, I just don't see the downside here. And then there was a downside. Right? So, right. I was doing the math in my head too. I was like, man, the value of Ethereum is this, and they've got this MNAV premium, and they could just keep issuing more shares and accumulate this Ethereum. And then one day they could do staking, and that staking is going to drive a yield, and that yield is going to end up going back to shareholders. I mean, I'm rationalizing this shit in my brain like, bro, this is a no-brainer. I can make money on this. Well, you know what? Chris gets it wrong too. So BM&R, really effed me good. So whatever, it doesn't matter. I didn't get back in. And one of the reasons why I think and this is something that just happens. when everyone was the tokenization. Thank you, Ed. When everyone is talking about this kind of stuff and the markets are at all-time highs, it's hard to find value.
It's hard. Yeah. Yeah.
You know, now there's a
but
much
also,
more target-rich environment.
that's when you get a crash. October 10th, when no one felt anything could go wrong, that's when you get a crash. Do you kind of agree that now, when everyone's hedged and buying puts and stuff, it's not as easy to get that same 20% drawdown?
Yeah, I mean, this is always like an exercise of
Psychology.
good investing psychology. It's like when everything is doing good, you should sort of question it. And when everything is doing bad, you should kind of lean in, right? So, and that's it's like this constant reminder that people like you buy when there's blood in the water and you sell, when there's euphoria. But it's hard to do it. It's hard. You're basically fighting against human nature. You got all these YouTubers coming online like Amit Kukreja who are saying, look at me, I'm fucking doing really well. You should goddamn buy Hood. The hell is wrong with you? Why wouldn't you buy Hood at $150?
Okay, first of all, no. At 130, I started saying enough is enough.
You did.
Tanner and Roy were both like, we're not. This is getting crazy. We didn't know it would go back to 70, but
yeah.
At 130, all of us were like, this is no.
One of my boys, he bought Palantir spreads. Right?
Oh boy.
No. He bought Palantir spreads, the put spreads, because me and him, I was telling him, I was like, yo, this Palantir thing, I think it's gonna go down, bro. It's just too overvalued. And it was like 183, almost 200 at the time. So he gets in and this thing goes down and he's doing really well on those puts. And he's like, yeah, this is great. And then Palantir somehow starts to recover a little bit. He just sells out of it with a little bit of profit. Right. And then this thing fucking crashes. And I'm like,
what do you think's going on with Palantir, and how do you think this plays out? I mean, it's already made a pretty ugly move from 200 to 130. So does it actually go to 50?
I think it goes to 50, but that's because me, man. I'm biased. I'm biased.
Okay, if you think it goes to 50, there's no way in hell the S&P is not down 10-15% as well. Or you think independently could actually S&P's at 7,000, Palantir's at 50? I just algorithmically, I don't know if that easily happens. It's possible.
It's to me, it's going to be about growth. If the growth story slows down, then 50 is where it's going to end up, right? If the growth maintains, they'll never see 50. So that's the question. Do you think that they can grow at the current pace?
I'm not concerned about at all. I think the growth story is intact at least for another 3-4 years. I think the macro is a bigger concern because the valuation is impressive. I agree, but the growth is there. They're guiding for 60% growth. If not, it's probably going to be 70% by the end of the year.
Exactly. So then you got nothing to worry about.
And that's why I think the bear thesis doesn't make like crypto. I understand Robinhood. I understand the bear thesis even more because of crypto. But Palantir, I think, because of its premium multiple, same thing with Rocket Lab. Like Rocket Lab's doing great on growth, but like the multiple's so high that if the macro takes a shit, then those can get really pummeled. But they are down a lot already. Yeah.
I mean, this is where you kind of have to judge the company individually and sort of ignore the macro sometimes. Like I know I just said you should always pay attention to macro, but there are times where if you get too macro heavy, you miss out on real opportunities, right? Because you're so focused on macro, like, oh, the recession's coming, you don't buy into a clear winner, you know? So you have to be balanced with it. So let me rephrase. Macro is important too, but sometimes you also have to look at the company and the company's ability to basically outrun the macro headwinds. Does that make sense?
Yeah, 100%. Do you like SoFi at 19 or no?
It's a bank. I don't care. I really don't care about SoFi.
It's growing to 40%.
It's a great bank. It's still a bank. What's funny? Maybe I'll talk to Steve about this. I'm looking at Flagstar. Have you seen them?
Yeah, I've heard of these guys.
Flagstar could be in for a nice upward move. I mean, it's already done a nice move.
This is a regional, right?
Yeah, it's a regional that has a lot of exposure to multifamily and commercial. But they're right sizing the ship. They've got pretty big backers. They've got Steve Mnuchin on the as an investor. So go to like the 1 year chart on this thing, and you'll see like Since then, it's kind of started to like make a nice recovery, go to 5 years out. Tangible book on this is like about $17, right?
Wow.
So you can see it's nicely growing higher and higher, right? So here's some game for everyone here who wants to invest in a bank. Look at tangible book value. If you have a traditional bank, I'm not talking about SoFi, who like how hovers between fintech and bank and stuff like that. But when you look at a like a traditional bank, look at the tangible book value of that company. So if the tangible book is less than 1, that means that you're getting a discount. If you're buying it at above tangible book value, you're pretty much buying at a premium in which you think that the company is going to grow into the future value.
Google just came out with something. Is this bearish Adobe? Pomeli, which is a photo shoot product. You can start from a single image of your product and create high quality customized product charts for your marketing.
It could be. It's pretty good.
See, but this is part of the reason why I think SaaS is selling off, because then the market sees this shit and they're like, how the hell do we buy Adobe? Even if it might not really affect Premiere or Photoshop anytime soon.
I've spoken to a few people about this. So, so what tends to happen is, okay, imagine right now you're running a race, right? 90% of your effort went from going from 0 to 90, right? And then there's the last 10% of the way. So you would think, hey, I only have to do 10 more percent to get to that 100%, right? Is that the logic that everyone uses? It's linear. To get from 1 to 90, it takes 90% effort. To get from 90 to 10 to 100%, it takes 10% of the effort. So there's not, it's very balanced. The one thing I've realized is knowledge work is actually the exact opposite. Yeah. Where to get from 0 to 90, it's only about 10% of the work.
Yeah.
It's that final 10% of the work where 90% of the value gets actually generated. So while Google can create an ad saying, oh, look, this Neutrogena ad, here it is. But then there's going to be elements that are in there that you want to change and that you want to adapt and you want to improve. So what are you going to do? You're going to take that image, you're going to import it into Adobe, you're going to make the changes that you want, and you're going to get to that final form that you need to get to. So where did that value actually get generated? Did it get generated at the first 90 steps, or did it get generated at the last 10 steps where the human illustrator changed everything that they needed to fit the ad that they're actually looking to do?
Right. Yeah. I think that's the question that the markets are going to have to eventually come to grip with. By the way, Celsius is up after hours. Looks like the CEO in a conference is detailing some new thoughts about their Pepsi partnership. That's what I'm seeing right now. And I don't know exactly what he said, but
I got to look into Celsius again. It kind of like fell off the radar for me after they bought Alani Nu. I mean, dude, the hype behind this thing was so freaking crazy. I got out at the freaking tippy top, man. I was so happy I got at the tippy top.
You literally got out at like 95 or something.
Yeah, that was a good year, man. 2024 was a freaking monster year. I'm trying to find these, dude. I'm trying to find the next monster.
How do we find it? Let me know. I would love to find the next best performing stock.
Unfortunately, dude, I don't know if we're gonna get those as often as they used to be available. I think you could get that kind of return in the private markets, and that's why Robinhood doing that thing with the closed-end fund may actually be kind of cool. But that's where the money is, in my opinion. Like if you find the right company and you get it at a valuation at the earliest stage, your total upside is insane. Like right now, your upside in figure is probably way more than anything that you would have been able to get at the from public markets, right?
And I think that's probably going to be one of my best investments ever. Like if the robotics humanoid thesis continues to be how it is, that thing's going to be like a very big return. But at the same time, it could go to zero. Like it really could go to zero. So the safety on it isn't there. But yeah, the problem is like it goes back to this hype cycle you're talking about. I don't really love Robinhood's closed-end fund. Like I love that they're doing it as a shareholder, but I don't like Databricks at 134 billion. And
Mhm.
if retail buys into that, you better be ready for that shit to get cut in half because it could happen. So
Oh,
if
yeah,
Figure,
100%.
if Figure or Anthropic were in the public markets right now, I'm kind of happy Figure's private, so I don't have to deal with the daily fluctuations. It's kind of like a safety for me, knowing that if it was public, it would probably be down 40, 50% easily. They're not
Yeah.
profitable.
Yeah.
Neither is Anthropic, right? So
That's funny. Anduril's like that too, right? Anduril, you see that it's doing really well, so it's like, yeah, it's one of those things where it kind of sucks for retail because the same thing happens in the credit markets as well. So like there are some private deals out there that are so value friendly with companies that are super strong, and they also have, they give you a lot of security in terms of like secured assets, but they're not available to retail shareholders because quite frankly, retail shareholders don't have enough money to do the deal, right?
Yeah.
So as an example, let's say you're a private company, you want to build a factory, right? Because you're doing so well. And you want to borrow $1 billion. So of course you can't get, retail investors to give you $1 billion. No one has $1 billion at the retail level, but institutions, they do. So they can go to Goldman Sachs and say, hey, listen, I want to borrow $1 billion to build this factory. I'm willing to pay a 10% interest rate, which is really high. For a retail shareholder, a 10% interest rate would be amazing for them, right? But it's not available to them. But you know who it is available for? People at the endowment level, people at the $1 billion mark, private family offices. They get these deals all the time saying, hey, listen, I've got an allocation in this private deal. Are you in for $5 million? That's a 10% return. And they're giving you like first lien priority. So that means that you're basically de-risked. You've got like hard assets that are backing the loan. So if you can get 10%, bro, you're chilling,
Is there any IPO that makes you interested at all, or no?
Not really. Not really. I mean, I'm looking at these IPOs as a barometer for where we are in terms of speculation, because I do think that if these IPOs come out, it'll be very interesting to see the S1 and then how they end up reacting. There is one IPO that I was going to buy into heavy, but I did not. And I feel like a schmuck. And I mentioned this one on the Patreon. You know which one it was?
Nope.
Look up VIK.
Viking Holdings. When did they IPO? Last year?
Last year. Look what they've done since then.
They're up 165%. Is it biotech? No, not biotech.
No, look, show everyone. It's a cruise line, baby. It's a
you should have bought it. This is when you were getting excited about cruise lines. Yeah.
Yeah, man. Cruise line. So if you look up, Viking, they do long ships. Have you ever been on a long ship before?
A long ship?
Like a river cruise?
No.
Okay. Type in river cruise and go do like Delta Nile river cruise. This is something that I'm thinking about taking the family and going to. Just show everyone. Yeah, so you see these ships right here. So they own these types of ships. A lot of them are based in Europe, but they also have some around Africa and stuff like that. So basically, you could go on this nice river cruise. If you want to type in at the top, just like Viking river cruise, you'll see it a little bit more like what it is. A lot of older folk like going on these, where you're basically going down like I think the Rhine and some of the ships in some of the rivers in Europe and stuff. Yeah, like that. And so it's really cool.
Dude, I've never liked the concept. I know you love cruises. I've never liked the idea of it.
Once you go on it, you'll sort of understand it, and especially like, once you have like a family and stuff, it even makes more sense. Like my brother-in-law and my sister-in-law, they took their kids and they did like a family, they took their cousins. And so they had like a cousins trip on a cruise, right? Bro, cruises are awesome. You basically go to the pier, You get on the cruise ship and you do nothing. Like everything is taken care of for you. You go eat whenever you want. There's entertainment on the board. There's casinos on board. Now they've got Starlink, so you're not even like disconnected from the world anymore. You've never been on a cruise, right?
No, I've been on it once, and I was a
You
kid.
didn't enjoy it. So yeah.
I was a kid, so I guess it's not as, enjoyable when you're 14. But
yeah, no, I mean, I'm telling you, if you go on the right cruise, bro, cruises are fun, cruises are great, and there's some people that get addicted to that shit, bro. They get addicted to cruises. Like they have like loyalty members, like some of these people on Royal Caribbean. Like when you're on the cruise, you'll see them, and they're pretty proud of it. They're like wear a badge and shit, and it'll be like, I'm on my 800 cruise, and it's like 800th. The hell. I know you think that's a joke, but I'm serious. There are some of these people, they do that shit. It's insane, man. They literally go from like cruise ship to cruise ship to cruise ship.
Well, the earnings on the old cruise lines have been amazing, so it makes sense.
Now, Norwegian's been the laggard in that because they took on a lot of debt, but then now they've got a bunch of activists on Norwegian as well. So I don't know if you saw the other day, Norwegian had like a nice double-digit up day, primarily because there's a lot of value in Norwegian that sort of has to get unlocked. There are intricacies of the Norwegian story that Carnival played correctly. Like the best company in the cruise line sector has been Royal Caribbean. If you see Royal Caribbean's performance over the last 4 years, just show everyone RCL. Bro, they're an absolute beast. All right. You're talking about a 300% return in the last 3 years, about 5 years, 5 years. But they really started to take off after 2023. And since then, they've done extremely well. Same thing with CCL. Look at that.
And you still have your spreads in these, right?
Yep.
That's up 30%. No.
Yeah. Carnival Cruise Lines. You see that down low in 2023? Look at that time. That was like $11. Since then, it's up almost 300%.
Yeah. No.
Right? And then same thing with NCLH. The benefit that the cruise lines have, that the other sectors right now that are getting pummeled, you can't disrupt AI. You can't disrupt these ships. The capex cycle is usually a decade out. These things generate tremendous amount of free cash flow. They took on a lot of debt during COVID to survive, and since then they've been recovering nicely. I mean, look at Norwegian. At one point, this thing was like $7. Now it's almost 24, and it actually rode up to almost 30.
No.
So, like I said, there's still value in a lot of these companies. So, as long as you're willing to kind of explore and take some risks here and there, you'll do well. But yeah, I completely missed out on Viking, which pisses me off because that was on my radar. I should have bought some.
Okay, last question for you. What do you think about Nvidia next week?
I'm a shareholder, so I hope it does good.
Dude, we are all praying this thing goes up.
Let me rephrase. I am an options holder, so I hope they do really well. Okay, I'm leveraged to the tits with Nvidia, so I don't see.
I don't have options, but
I don't see how Nvidia does not have a blowout quarter, considering just how many of these AI companies, they all came out and said, we plan on boosting our capex. And I don't know if you saw this today. By the way, type in Reliance, like Ambani, and type in India data center. So for people in the chat, Reliance is like one of the largest companies in India. They're going in AI infrastructure now too.
210 billion, bro.
Yeah.
Holy. Yeah, come on, bro. This has got to be good for Nvidia. I think, right? I think it's good for Nvidia.
Yeah, of course it is. Reliance doesn't have its own chips. They got another where all of that money is going to get filtered down to maybe some of it to AMD too. Don't forget about them. People forget about AMD, but basically the sector, it's definitely got some tailwinds behind it. See, this is what I don't get, bro. India is doing 210 billion, and what does the French do? Look at what France Macron's like
30 million.
He's like, we're gonna beat America with 30 million. I'm like, bro, $30 million doesn't even get Sundar Pichai up in the morning to take, like it's just come on. You gotta be a little bit more serious than that, man.
Bro, Sundar Pichai would look at 30 million and he would be if he had 30 million in his wallet, he would be disgusted. He would be like, what is this?
That's his like daily credit card balance, bro.
That's
It's
his
like
credit card balance, bro. 30 million's embarrassing to Sundar.
Yeah. I wonder what the next step in sovereign AI is going to be with that, what we just said, which is who else is going to be investing all of this additional money into it. By the way, all the guidance that Nvidia gave was without those Chinese chips. Do you know what's going on with those? Because it feels like every day it's a fucking new story. Did these things ever get to China?
I mean, from my understanding, he got the approvals. I don't think he actually shipped them yet, but they got the approvals to ship them. So eventually,
because it feels like the U.S. says no, and then the Chinese says yes, and the Chinese say no, and then the U.S. says yes, and then it's kind of back and forth, back and forth. It's like I kind of lost track, 30 mil couldn't even pay for Karp and Jensen's jet to Europe. By the way, what's with you and Twitter beefing, bro?
I'm not trying to be in beef, dude. I don't like being in beef. I didn't ask to be in beef, but I ended up in beef.
It's weird because my brother called me. He's like, what the hell is Amit doing fighting with Burry on Twitter? I was like, what are you talking about? And so I was like, because what I did was, because I was getting so much like Palantir hate comments, I just blocked off the keywords Palantir and PLTR on my timeline. So I don't see anything. Right. Yeah. Unless I want to see it, then I'll actually type in PLTR and then I'll actually see some of the stuff come up. But yeah, I didn't know that you were beefing until my brother told me. But I was like, yeah, you didn't see? I was like, no.
I wasn't beefing, and whatever Burry said, he then deleted all the tweets. But it is kind of crazy, dude. Honestly, I think he's just using it for attention, and he knows. Like, same with this James Fishback guy in Florida who's like, I will ban Palantir in Florida. Like, they all know it's such a hot topic. The MAGA right-wing base, like real right-wing base extreme of MAGA hates Palantir because of all the conspiracies.
The liberals hate him too.
The liberals hate him too. And then the people that think the stock is crazy overvalued hate him too. And then you got people that hate Karp. And so there's so much animosity that I think Burry's just like, fuck, I will make so much money if I just explain why. And he probably does believe it's overvalued and all that stuff. But yeah, I think he's tapping into it from that perspective.
The question then becomes, do you think that this could be like a political headwind for these guys in the future?
Look, people have been saying for the past couple of months that this ICE stuff and all that, it's going to be a headwind for them. I don't think it is going to be because this administration is pro the type of work that Palantir. By the way, so was the Obama administration, so was the Biden administration. Like Palantir succeeded in any, but it depends on what Democratic. If AOC wins the presidency, which I don't think is going to happen, but Palantir's not getting that many contracts. It's going to be tough, right? Because AOC is not going to live with the pushback of being awarded Palantir. If Newsom wins, who's more moderate, maybe they are okay. But if JD Vance wins, they're going up. So, yeah, I do think if the Democrats take over Congress, there is a potential political headwind. But, they've been able to survive multiple administrations.
Yeah, I think the quality of product sometimes can outshine the politics of it, So that could be a big factor. And the thing is, clearly we are seeing adoption, right? It's not like, I'll tell you a funny story. I was talking to somebody about Palantir about 3 years ago. It's like, the person worked in IT and everything. I was like, what do you think about Palantir? He's like, what's a Palantir? I don't know. When I was like, wait, you never heard of Palantir? They're this great company. They do all this stuff with data mining and everything. I was like, no, not really. Like, I don't really care. And I'm like, okay, can you do me a favor? Can you do some research on them and, tell me what you think? And he basically told me, he's like, yeah, there's nothing special. It is what it is. It's just they have some stuff that's proprietary, but most of the stuff that they have is all based on open source tools. It's nothing that is very unique or special or anything. And I said, oh, interesting. This person that I really highly respected, they work in the tech sector, but they work for a non-tech company that in their technology division. I asked that person like a few months, actually like like a month ago because I was at a funeral and I met the guy again and I said, hey, what do you think about it? He's like, man, Palantir's great. We've got them working with us. And there's these guys that are coming in and they're doing all these like things and they're super smart. And I'm like, son of a bitch. Like, you said that they weren't anything special. What the hell happened to that? He's like, well, they weren't special at the time. Now they're helping us and they're special now. And I realized AIP was their sea change.
Yeah.
I think AIP really hit, like they really nailed it. Like they hit the nail on the head with AIP, you know?
Yeah.
They ended up getting, yeah.
When Burry says the tech isn't real or anything, I just look at the growth, dude. Like, I don't even have to get that deep into tech. Like, they're not growing at this level if it's fake. And so the valuation's up there, but
the company that my friend works for is not a small company. I'm talking about, this is like a multi-billion-dollar, like a lot of money. So when they get Palantir and they're actually utilizing it and they're actually applying it, this is not a company that's like, oh yeah, let's just buy vaporware and put it into our organization. Like they go through all of the shit that they need to, and they like the product. So now to me, it's a confirmation that, hey, there's actually something real there. So while some people will say, you know, and there'll be naysayers, of course, with Palantir, I don't think that there is a narrative anymore that they're just a consulting company. I know that's the kind of narrative that people keep pushing on it. I'm like, maybe some of the model that they use to get into these businesses seems very consulting-ish, where you actually have to get people to set up. But one of the sea changes that we are seeing, and this is something that, you know, you can, and everyone here in the comments, you guys can look up. The FDE model works. The forward deployed engineer model works, especially with AI. It works. You know, you've got companies right now, they're like, hey, I want to improve my business processes. What do I do? You know, they could get their own data science and analytics team, or they could just get Palantir and their FDEs to do all the stuff for them. And now all these other companies are doing the same thing.
Well, Microsoft, right? Salesforce, all these guys are adopting it. And OpenAI literally put out on their blog that we are rolling out forward deployed engineers to roll out Frontier, which is kind of like their Palantir copycat. I mean, the FDE model worked. And the stock was discounted heavily when people thought it was a strain on the business. Now it's like, without FDEs, like, you can't implement an AI.
Yeah. And the next generation of things that, you know, that Palantir is doing could even help boost. I mean, the argument that I didn't get that made sense from Burry was Alex Karp is spending money on a private jet. And then I'm looking at the free cash flow on Palantir and I'm like, this motherfucker is like, I'm not going to hire an army of salespeople. I'm going to go to all of these companies myself and sell this fucking thing. Bro, 17 billion is cheap compared to hiring an army of salespeople, paying them full-time salaries and a commission.
Steve and I will talk about this tonight, but we were talking about it in the morning. I talked to a bunch of people today that actually work in tech and, you know, are pretty close to C-suite executives and have to deal with. I've talked to people that have been on private jets with the CEOs, and I was like, what do you think about this? And they were like, is Burry fucking retarded? Is he actually like, the amount of money that they are spending on air expenses versus the free cash flow growth that you're talking about and top line revenue growth? First of all, that ratio is better than every other company out there because none of these companies are growing as fast. Number two, there's no sales force. Like you said, Karp has to go and close these deals, especially when you're meeting with the prime minister of Estonia. Like, the CEO kind of has to be there to get the job done. And so all the pushback that I was getting to respond to Burry when I was like, what is wrong with you?
This motherfucker this dude flew into a war zone. Like, literally went into fucking Ukraine. He didn't have to do that. He actually met with Zelensky. Like, think about that. Which other American CEOs like, yeah, let me go fly over to a fucking active war zone that's being shelled by the Russians? Which other CEO you know is doing that?
By the way, and that's not going to happen on United. Like, you kind of have to have some private. So, second of all, people were like, oh, well, the 8K explicitly says that it was for personal and business. So we don't know the proportional ratio. I'm like, if you think they're putting up 70% growth, because 90% of the time Karp is flying around the world having fun and 10% of the time is for business, you're out of your mind. Obviously, they have to say personal and business inside of an 8K because it's a formal SEC filing. But like the affinity to believe that, Like, are you stupid? Like, are you actually stupid? And then to complain
it's not
about it.
stupid. It's just bias. It's just bias. That's all. I don't think that there's, if you make logic, if the guy was being logical and he said, look, the 17 million is getting extracted from shareholder value, and you're seeing a company with negative free cash flow, maybe there's an argument to be made at like $100 million valuation on a company where the 17 million is going to.
Yeah, that's 20%. If 20% of the valuation is being spent on private airfare, yeah, that's an issue. If it's less than 0.01% of the free cash flow, 0.00001%, bro. You know, the company generated how much of free cash flow last year? Let me pull it up. I think it was upwards of 1.9 billion.
1.9. What's 17 billion out of 1.9 billion?
It's not a lot. It's not a lot.
I mean, once again, there is no direct sales force either for these guys.
2.27 billion. Yeah, like
there's no direct sales force. This, like, literally, this guy is going around the world closing deals. And he's closing multi-million-dollar deals, which, by the way, if you want to close a $10 million deal, you can't just send a salesperson. You can't do that shit over a Zoom. You need to send the CEO of fucking Palantir over there.
By the way, as someone who's met Karp, this guy, and has talked to a lot of people that are close to Karp, this guy's constantly working. I think he spends like 300 out of 365 days traveling. Like, he is constantly working, constantly going places. He's here, then there, then there, then there, because the company is growing. It's a very important company. It's very classified stuff that they're working on. Like, I've met a couple of his personal assistants that work in the, office of the CEO, OCEO. And I was asking them, this was back in the summer. I was like, so, like, you guys travel a lot, right? And they just looked at me. They were like, buddy, we live on the plane. Because they have to be there with him everywhere he goes. And they're just constantly, you know, they're not going to party around the world. Like, they're getting shit done. So I just thought it was,
even if they were, who gives a shit, bro? If you are the primary sales channel and you're bringing in multi-billion-dollar deals a year, bro, go have some fun, bro. I don't give a shit. Go.
Well, that's the other thing, dude. The stock went from 6 to 200. Okay, you could spend 17 million on your airfare. Like,
the one thing I don't get that Burry is, why isn't he highlighting the executive comp? If anything, you know, that's what I would be shooting for. I'd be like, look, its executive comp is too high, or the SBC on the company is too high, or something along those lines, or insider sells. I mean, look, coming from a person who's bearish on Palantir's valuation, this was such the lowest hanging fruit in terms of like the bear case that it's like, bro, why would you do it? There's so many other things to be critical of Palantir for, but this is not one of them.
I have an idea. It's been a long time.
Yeah.
It's been a very long time.
I'm not coming off Palantir Weekly.
Why don't you rejoin the community? Make a post tonight. Chris, I'm asking you to buy 100 shares. I'm asking you to $13,500. Make the post tonight. It will go viral and it will be the best. We will open you. We would embrace you with open arms.
I'm good. Back. I'll be back at 50, bro. I told you. When it turns 50, I'm there, bro. I'm right there with you. I'm a man of principle. I'll go down with my $50 price target ship, bro.
Dude, but imagine how good you would feel if the entire community is just like,
no, you're not gonna do this. This is how y'all got me into BMNR.
Hold on. All right. The chat, I need you more than ever. We are going to convince Chris tonight to do this.
No, dude, I'm getting out of here. I'll see you later.
I went from 200 to 130. Bro. At what point?
No, bro. I'll see you at 50. Maybe 75. We'll see. I do have to change it up a little bit. Maybe I'll have to go to 75.
Buy 10 shares. Not 100. Buy 10. Buy 10.
Nah.
I'm the rest of 50 if it gets there.
Sorry, I'm a man of principle, bro. I've already come up with a target. I'm not gonna waffle on it.
Dude, if you bought BMNR at 60, you're telling me you can't buy Palantir. You bought fucking options on that shit, and you can't buy some fucking Palantir at 135.
I can't do it. I can't. You know, I feel like Al Pacino right now. Every time I try to get out, they just pull me back in. No, I'm good, bro. You guys enjoy Palantir. I'll be back at 50, 75. We'll see what happens. All right. Have a good one, guys.
We'd love if you come back. We'd love it.
I'll see you later. Have a good one. Like I said, I'm watching on the sidelines. I would be remiss if I don't still check up on the company's fundamentals everywhere.
I know you stock their earnings. You care about everything still. You still love the company.
Yeah, I do, because I think it's a great company, you know, but I'm gonna do what I do. All right.
All right.
Later,
Thank you,
guys.
Chris. Chris's Twitter in the chat. We'll see you next
Have a
Thursday.
good one.
Later. We tried, guys. We really did try. He was getting kind of close. You saw him ready to leave just because of how convincing we were. Like, we were really... I mean, look, the stock is down from 200. He's always wanted an entry. I'm not saying that it's cheap. I'm just saying that at some point it's a stock market. Like, if the stock goes down enough, you get people that come in. We're going to get him back one day. All right. That's it for me. Celsius, do we have the... No, we don't have the headline. Most likely tied to investor reaction around the conference presentation and commentary. So Celsius is... I think they said some stuff about their Pepsi deal. That's why this thing got a bid right here. Celsius, 9% up after hours. I guess we'll find out what they said about that Pepsi partnership later. All right, I think that's what we got. I will be live with Mr. Steven Fiorillo at 9:30. So, yeah, I will still see you guys tonight. Steve texted me that he's at a steakhouse for dinner, and he said, I'm having steak, veal parm, and spicy rig. I was like, what the hell is spicy rig? Apparently, spicy rig is spicy rigatoni. I don't think I've ever had that before. So he's enjoying some pasta. We'll be live in a few hours. And yeah, I think Steve and I will talk about the Palantir stuff. We'll obviously talk about this growth value rotation. I'm sure there'll be some other stuff that pops up. But I think that's pretty much it for me today. Could get fun tomorrow with the tariff ruling. Yeah, do that tariff thing. Also, why does Trump keep saying he's not going to go to heaven? Like, what? He keeps referencing this talking point about heaven.
It's not worthy of heaven. I'm not going to make it. And I was having a good time going, you know, I was having fun. I hope to make it. But I doubt I will, to be honest with you. A lot of you will. I'm not so sure. But I was having fun. The New York Times has a front page story. Donald Trump is now questioning his mortality. They made it like I was totally... So you can't joke.
He's done this more than once, this idea of, I don't know if I'm going to go to heaven. It's almost like he's subliminally trying to say something about how he feels his life has gone and how he thinks he's going to be judged or whatever. Like, multiple times he has talked about this idea of him not being sure if he's going to go to heaven, which maybe there's some humility there, because I don't think any of us fully know if we're going to go into heaven, if you believe in heaven. But I don't know. That's what he said just now in this press conference. It's not. It's a rally more than a press conference. So we looked at the most important clips. I don't think there's any other headlines that's there. He talked about the stock market, talked about people's savings going up. He said affordability is fake news. We got another winning clip from him. Let's take a look at this.
He said, you remember when the president used to tell the story about getting tired of winning? You reminded me. I haven't told that story in a long time. You're going to be so tired of winning. You're going to be exhausted. You're going to get tired of winning. Remember I say, your governor or Kelly Loeffler, somebody's going to come up and say, President, please, we're winning too much. We're not used to it. George is not used to it. We can't take it anymore. People are working too hard. They're making too much money. Please. We don't want to win anymore, sir. It's too much. I said, nope. We're going to keep on winning. The people of Georgia want to win. I'm sorry, Kelly. The people of Georgia. The people of Georgia want to win.
All right. And that's what we got. Gonna keep winning. Hopefully we keep on winning. Again, SPY was flat today. Nothing crazy here. Tomorrow, the Supreme Court thing, that's going to be the most important. Opendoor, getting a 15% pump. So if you're in that one, congrats. That one got the move. SPY is flat. BTC just below 67. Oh, Supreme Court. We got a clip on that. Let me pull this up. Let me pull this up right here.
And to think I have to be in the United States Supreme Court for many, many months, waiting for a decision on tariffs. Without tariffs, this country would be in such trouble right now. Without tariffs, this country would be like your company was 2 years ago. What a difference it made. And you know who brought the case to the country? And to think.
All right. Tomorrow, we'll hopefully find out what's going to go on with tariffs. That's going to be one of the most important news pieces of the day. And maybe tomorrow we'll get that information. All right, everybody. Thank you all for being here. We'll be back tomorrow for the market open Friday as we end out the week. And I will see you then. Thank you, everybody. Appreciate it. See you guys tomorrow on the market open. Also, I'll see you guys tonight on Steve's channel at 9:30. Bye, everybody. Have a good one.